Welcome to Bitcoin Escape Plan. Bitcoin has been on a massive downtrend recently, and everyone is asking the same question: how low can Bitcoin go? And in today's video, we're going to go over the key levels of support and resistance that actually answer that question for us. Later on in the video, we will go over the higher time frames just so we understand the historical context of how Bitcoin typically behaves during this time of year and how I was able to be positioned ahead of time for this move. At the very end of the video, I will talk about my trading mindset for the 4-hour break room at the end. Make sure you watch until then. If you're new to the channel, go ahead and check out bitcoinescapeplan.com and learn more about how I reduce market uncertainty around Bitcoin with the levels that matter most. I share those levels here on YouTube every Sunday, Monday, Wednesday, and Friday. And every Monday, I release an in-depth breakdown directly to your email where you can read in your own time. And if you're just kind of new to overall crypto or why Bitcoin is so important, you want to understand why I'm so obsessed with it, check out my book right here, The Bitcoin Escape Plan. You can read it for free when you put in your email, bitcoinescapeplan.com. All right, let's check it out. 4-hour chart to begin with. So the couple important things that have just happened recently on the chart that we need to pay close attention to. The first one being this interaction right here. This is the downtrend anchored VWAP. If you don't know what I'm talking about, go ahead over to courses right here. I explain it in more depth there. But functionally speaking, we like to think of the anchored VWAP as a series of magnets. Now, when we started to break down up here at around the 83K level, that was a break of the middle band of the, actually this one is the middle band of the elder VWAP. We didn't even make it to the downtrend anchor VWAP. So this guy is actually drawn from 2011 to now. It's an uptrend. This guy is the 126,000 all-time high back in October. So what that's telling us is that we have more downside pressure based on older volume essentially, and we're not even able to get higher than the downside pressure of the middle band of the downtrend anchored VWAP. That's a whole bunch of mumbo jumbo that just means the price wants to go lower, not higher. As well as this guy right here. This is the uptrend from the 59.9K bottom earlier in February. This is really the one that everyone is going to be keeping their eyes off of. A lot of people are expecting us to have a favorable bounce above that, and they were ignoring the really key signs on the higher time frame that we're going to go over later in the video that made all of this super clear. Anyone who is confused about this drop or says that it's because Michael Saylor sold some Bitcoin, or they say it's because of the Strait of Hormuz or whatever, they don't know what they're talking about. If they understood how key levels work, they would understand exactly why it behaved this way. And again, we'll go over that in a little bit. So in the shorter term, on the 4-hour time frame, we've lost a bunch of key Fibonacci pivots, and as of Sunday, May 31st, we have broken back below the 4-hour SMA and don't currently look like we have enough momentum to get back to a retest. A retest at the moment would take place at about 69.8K, but price does not look like it is done dropping yet. Bitcoin is in the water and it smells blood and it still wants to go lower. So how low realistically do we think that it can go at this time? So my first target would be about 64K. 64K on the higher time frames being this Fibonacci pivot right here. As you can see, we're actually kind of sticking to the bottom of these closing candles right over here. So price at the moment may be forming some level of support there, sufficient enough to bounce back to that bottom band of the downtrend anchored VWAP, which on the higher time frames is at about 68.1K. I've been saying in content the last 2 days 68.4, but it's already curving downward, which again indicates more downside pressure. So the shorter time frame targets that we want to pay close attention to, we just lost the point of control. That is the highest point of volume on the chart. At least on this time frame since I set it, which I believe was in January, maybe December. So 67.5 has been like the highest point of volume on the chart. Since then, we have just broken below that, which means a lot of people above are now in significant loss. And even the people who bought in during this range on the way back to 83 are now going to have to be met with the same decision as the people above of, okay, did I make a mistake? Is it just going to keep going lower? Or is this a time to double down? So a lot of people are having to decide right now, do I double down? Do I wait? What happens next? So Initially, we're going to want a reaction to about 64K. We may have a strong reaction back to the upside, but historically, what we would expect is actually probably another retest of 60K, more likely. So 64 might just be a bit of consolidation. Interestingly enough, we do actually have a very similar trend from the month of May, where we hit our local high like May 5th or 6th, and then we continue to drop for the rest of the month. So it may be very similar for June, where we see the brunt of our drop early in the month of June, and then we slowly kind of consolidate. Maybe we go up during the FOMC meeting when Kevin Warsh speaks for the first time. We know that he's going to mention Bitcoin, so that may be enough to quell the fears of us dropping lower and to give us a little bit of consolidation. That it is still my belief that we are going to rise into the month of July. I just don't think it's going to be that high. So again, these shorter term time frame targets, most of these don't matter. 72.5K was important at the time, doesn't matter anymore. 71.2 also not super important. 69 more important, I would say, way more important. 69K being the second all-time high in 2021. So historically speaking, that one does hold weight. That one is pretty important. But again, we're mostly going off of the bottom band of the downtrend anchored VWAP because that's the magnet that price is going to get pulled towards. So even though we have shifted down below the magnet, when price inevitably does find some support in this region, whether that's at 60K or 64K, we will see a gradual move back towards that 68.2K level. It may still fall below it after that point, but we will see some type of consolidation that'll pull it back there over a long enough period of time. It might take, the first 2 weeks of the month, but again, once we have that FOMC meeting, which I think is the 14th or 15th, I would imagine that we'll probably see this trend reverse temporarily. So that's it for the short-term time frame. Let's take a look at the higher time frame and understand why the price just did this. So anyone, again, who is confused as to why the price just did this, you're not paying attention to the key things on the chart. So what just happened last week on Sunday was we closed below the 76.3K Fibonacci pivot. I talk about this all the time on the channel. All my subscribers know about 76.3K. I never shut up about 76.3K. It's super important on both the weekly and monthly time frame because that's where we closed. The month of April was directly on that Fibonacci pivot level, slightly above it, which meant that any close below 76.3K for May would be bearish. And that is exactly what happened. We formed a shooting star pattern after previously having an inverted hammer and being green for the whole first part of the month. People were I remember channels that I respect very deeply were saying that we're going to go to 100K, and I had to stop watching their videos during that time so that I wouldn't lose money on the trades because they didn't know what they're talking about. They don't understand the charts as well as I did for Bitcoin, apparently. So what we are seeing now is the first major move that is already below the lows right here for February and April in terms of the closing candle, at least not below the wick, obviously, for February, but that's going to be the primary thing that we're going to see tested this month is, do we need to retest 60? Do we potentially break below 60? At the moment, we've got the monthly SMA curving down for the first time now. Technically in years, this is now the first time that it is curving down, as well as the bottom band of the Bollinger Bands starting to open up to the downside as well, indicating expansion. We would probably see that expansion to the downside, not to the upside. Even though, again, I know that you're hearing all the same news stories that I am, everything around the Clarity Act, around Michael Saylor and everything else. It doesn't matter. What matters is the chart and the levels, and that's pretty clear for us. So let's go over those points real quick. So in a bear market here, what we would typically expect to see is 3 to 4 green candles total over the entire course of the year. We've already seen 2 green candles. What does that mean, ladies and gentlemen? That we have about 1 to 2 more green candles for the rest of the year is what we would expect. I know a lot of people say that the 4-year cycle is dead. Those people are pretty quiet now because it looks exactly like the 4-year cycle to me. Nothing has really changed. I don't understand why people say that. It's very silly to me. But again, every other bear market, we got 3 or 4 green candles. That's all we got. 3 or 4 green candles. 2018, 2019 is very important. This is the last time that Donald Trump was president. So far we've seen the price behave in a very, very similar way, where we had our higher low form in May. that followed by a capitulation event, and then June continued lower and ended up going just barely below the February lows. So again, almost identical to what I'm expecting this time around, with then a capitulation there that ended up rising into the month of July. That formed our final higher low before again we consolidated back down towards that level. It is worth noting that what is this? What is that level? That is 6K. Exactly the same as 60K, functionally speaking. Obviously a different level of magnitude in terms of volume, but this is literally, you can't make this up, guys. Like, this is why I look at one chart and no other charts. You can't do that on any other asset on the planet, not even gold. Bitcoin is the only one that you can do that on, where you can actually understand based on key levels how it's going to behave. So again, that's what we're here for. So that's what I would be anticipating, is that we're going to chop around the 60K level probably all the way into September. I would assume we start to see a significant breakdown after September, but I think that they're going to pull out the Clarity Act narrative as long as they can, and they're going to try and make us think that, oh, higher prices are coming, and then they're just not going to come. 2014 is also worthy of noting, a little bit less so now. When I was talking about 2014 in most recent videos, is because we had an elevated time above the weekly SMA in 2014. Dear God, what did I do? Where is the chart? So over here in 2014, pause for readjusting. This was the longest time period that we have above the weekly SMA in 2014. That's about 12 weeks above it. That's what I was basing off of for now, because we were at 3 to I think 6 weeks above it before we finally broke down now. Whereas every other time in history is 2 to 3 weeks, besides this instance right here. It is worth noting this is when the IRS formalized Bitcoin as property in the United States. Super, super important. Inarguably bullish news, and the price still went down. This is why I believe that the Clarity Act is still going to push the price down, even though it is objectively bullish. Anyone who tells you otherwise does not understand how Bitcoin works, and you should not be nice to them. I'm just kidding. Be nice to everybody. So that's what we're looking at right now, is the continued failure of the weekly SMA. We don't have any historical context for the price to break above the weekly SMA and then magically break back above it. Once it has broken above it and it has given its college effort and has broken back below it, it stays below it for an extended period of time until we are done with the bear market, which is Q4 until proven otherwise. I know that a lot of people like to hate on that, on like just do nothing and buy back in October, but that's reality, folks. Like, I don't know what to tell you. Like, that realistically speaking is the case until proven otherwise. Also, just from a logic perspective, if you're the largest government on the planet and you've decided to make a concentrated effort to start buying an asset, why the hell would you want that asset to be overpriced when you buy it? The answer is you wouldn't. If you're JP Morgan Chase and you want customers to irrationally spend on stablecoins by giving them promotions to buy as much as possible, if you have the buy Bitcoin button right next to the stablecoin button, do you want the price of Bitcoin to be 50K or 100K in order to get people to spend more irrationally? Obviously at 50K, not 100K. So because it benefits all of the market makers for the price to continue dropping for the rest of the year, I'm just going to assume that that's what's going to happen. I don't know why people make it more complicated than that. It's not. So in terms of how low can Bitcoin actually go right now, I think 64K is the first target. Again, we might hit that very, very soon. And then we would just be waiting to see if we need to retest 60K this month, which is, narratively speaking, is going to be huge. I don't really pay attention to the news, but I think that the news is going to be pretty loud about that, about whether or not it breaks that as a level. Maybe not, though, because they've been pretty quiet since in July over here. They were saying that Bitcoin's never going to break below 100K again. And then obviously that didn't work out very well for the news stations, because 2-3 months later, that's all it did was break below it. So I'm kind of out of the loop for news narratives, to be honest with you. All I really care about is the levels. And what the levels are telling me is we want a retest of 64K. You can confirm this as well by being below the middle of the range. The middle of the range is about 70.3K, 70.4K. And like I say in every other video, if we are below that, it puts pressure towards a retest of 64. If we're above that, it puts pressure towards a retest of 76.3. And that's it. It's pretty simple. It doesn't need to be more complicated than that. Me personally, What I think is going to happen is we're going to continue to break down towards 64, probably show weakness there, drop a little bit below it, start to show strength, like I said, around the middle of the month, around the FOMC meeting. And then I would anticipate that where we're actually going to fail as a lower high in the month of July, I think is that 76.3K pivot, if we even get there, because that's going to be predicated upon will be below the weekly SMA. It's not uncommon for around that time of year for us to have multiple breaks of the weekly SMA that still result in a failure. I think 2018 is actually the best example of that. Let's go take a look real quick. So this is 2022. We have our rise into the month of March that ends up capitulating downward. We don't really get back there. That's primarily because of the Celsius, Voyager, BlockFi all going bankrupt during this time, taking all of my money. Thank you so much, Alex Masinski, you terrible, terrible human being. And then over here is the more prevalent one. So we had our rise in April, followed by a drop down in May. Had our our high this instance was in April, not in May. Obviously, we had ours on May 5th, so slightly different. Also, obviously, this is when only the CME futures were available during this time period, whereas where we are now, there's a ton of futures and leverage contracts available for people. So that I do think sometimes that'll skew the broader movements. Like, I can't really confirm this, but for me, I think that they want to get the majority. This is being the market makers, is they, not some nebulous they. The market makers want to push the price down as quickly as possible in June, because anyone who had a May short for a futures contract that then they had to roll over into a June one, a lot of people are going to roll that over and just leave it. So the smart people are going to close it, I would say probably within the next 7 to 10 days, because I do, as I said, I do think we are going to flip bullish after the FOMC meeting, and going into the month of July, we will start to rise. But that'll leave some people in futures contracts that they're not looking at, which I think just ends up more people getting rinsed. I think they're going to try and rinse everybody in the stock market right now. If you think that them taking away the $25,000 day trader rule and tokenizing stocks so that they can be traded 24/7, if you think that's for the benefit of the people, you're delusional. That is so that they can rinse people who are uneducated of all of their money, period. Like, that's, to me, that is what's happening. That's why I'm focusing on Bitcoin and nothing else, because I don't need to ask your opinion to be able to know what Bitcoin is going to do. That's why I make a channel for it, because I realized, you know what, it's actually healthier for me to just really study the charts so that I can be able to, one, teach other people, because I want you to be able to understand it the same way that I did. I'm using a free version of TradingView. I'm using 3 indicators. One of them is volume, and I'm able to anticipate the price more accurately than channels that have hundreds of thousands of followers and millions of dollars. I don't have millions of dollars. I wish I did. It would be great, but I don't, So that's what we're looking at, is how is it going to behave around the weekly SMA? I don't think it's going to retest the monthly SMA. The monthly SMA, typically speaking, is a period of about 7 to 12 months before we reclaim it. And it doesn't look like it's going to be 7 months now. There was some argument where it could have been shorter, if the May move continued to the upside, but it failed at 83, just like I said it was going to back in February. So what we're actually looking for is more of this, where we're going to see, let's see where this bottom is in June. So the bottom is looks like about the 3rd week of June. And again, that's right around when the FOMC meeting would be. And then the price starts to go up after that. So I'm anticipating roughly the same thing. I don't know when the FOMC meeting was in 2018 around that time. So that could have influenced it differently. But that's what I'm anticipating, is that this downside trend will continue into the middle of June. The FOMC meeting, Kevin Warsh is going to come out and talk about how Bitcoin is functional for the rest of the country and how it's going to change how the Fed behaves, or whatever the hell, That's what he's going to talk about. It's going to be bullish at that time. Maybe there's some other Iran news around that time. I don't really care. I care about the levels and the cycles, and it behaves the same way. Every 4 years, it behaves the same way. So that's what we're going to be looking at, is I will probably at that time have to decide whether I'm going to close my short and then start taking some upside. I would imagine, to shift into the trading portion of the video now, I would imagine what I'm probably going to do at that time is I don't need to stay in the perpetual trade indefinitely until it's actually clear to me that it is we're just going to keep dropping, which again I think is after July. I think after July is really when it's like, okay, we're just going to go down. We may still consolidate. Like I said, in those other years it was until like September, October that the full breakdown actually happened. I don't really care, but I want to be full leverage exposure to the downside as of that July peak. I just don't really want to miss out on that rise to the top for July because I do believe it's going to happen. Right now I'm up, I think 140% on this trade, something like that. Let me see if I can calculate it real quick. Yes, I'm up roughly 140% on this trade, which is awesome. Like I get it that like the stock market's going crazy right now, that you can get Hyperliquid, you can get Zcash, you can get a couple different alts that are outperforming Bitcoin right now. But I got to be honest with you guys, I don't understand why people are so fascinated by trading leverage on things that they don't understand, rather than just learning one chart. Learn one chart, and it's this chart. It's the Bitcoin chart. If you learn the Bitcoin chart, teach a man to read the Bitcoin chart, and he can fish for a lifetime. That's really how I think about it. So that's all we're looking at is clean setups. So at the moment, our 4-hour break strategy is probably a little bit less prominent, I would say, than the historical analysis. And you really kind of got to be able to juggle these two things. There are some trading regimes where you're going to be able to trade just my strategy, which is from a probability standpoint, when we have a clean candle break, I refer to these as kissing candles. When we have those, typically, it is a high probability that there's going to be at least a 1% swing in the opposite direction based on a back testing I did until the middle of last year. So it may behave differently in different regimes, but that's what I've been using so far, and it's working really well. To the point where even sometimes when I'm wrong, I still make money, which is nuts. Like I can't do that with options. I can't do that with meme coins. I can't do that with anything else. But sometimes you can be wrong with perpetual trades and still make money, which is awesome. So even in this instance right here, that was a long technically. It was just a very small one. You had about a 1.5% move, I believe, before you had to get out of it. Same thing with this guy. You had just below a 1% move before you had to get out of it. I would not have taken any of these as longs. That would be very silly. And that would be not also the rule set that we have. This is the last one that actually you could have taken. Dear God, Sticky Keys, you're so helpful. That's exactly what I wanted to do. About a 2, almost 3% swing there. So depending on where you caught that move, and that's the name of the game right now. Is like you're either looking for scalps to trade off of this, or I got to be honest, I way prefer just being exposed to whatever direction I believe that the perpetual is going to run, because then I don't have to do anything. I've been in this trade since I think the 18th of May, and I don't have to do anything. I'm up like 140% on the trade. I just go to bed. I go to work. Like I don't worry about it. It's awesome. So it's much, much easier, I think, just to remain exposed to wherever the trend is actually heading, which requires you to understand the historical analysis. If you don't understand the historical analysis, you're going to be flying blind. Again, huge channels that I follow just to check my homework against. It's wild to me that they're going purely just based off of naked price action right now and trying to combine that with what's happening in the stock market without understanding what is actually occurring. Again, this is why I wrote a book about it. It's on the website. You can go read it for free. It's the first chapter of the book. Well, the introduction chapter technically is about me, but the first chapter of the book is fiat inflation. What they are doing is they are devaluing the dollar, and as they continue to do that, they need hard assets to back up whatever value the dollar does have, which is assets like gold and Bitcoin. This is rule number one is fiat inflation is why Bitcoin behaves the way that it does, which they need to keep people distracted so that they are not just buying Bitcoin. That's why I made a channel about it, so that you remember you need to be focused on Bitcoin. You cannot look away from Bitcoin during this time just because of the SpaceX IPO and everything else that's going to look really shiny and appealing. You're going to miss out on the asset that governments and corporations are doing everything in their power to make sure that they can hold on to forever. That would be very foolish in my opinion, my friends. So Locally speaking, what we're looking for again is a reaction to either 64K or 60K. As you can see here on the 4-hour time frame, we don't even have any lower Fibonacci pivots opening up. We got nothing at the moment. I would imagine in 2.5 hours, we'll probably have something open up just because we are so far below these ones. But functionally speaking, even the price is like, I don't know how low we can go here. It beats me, you know. But again, I believe it's probably going to bottom a little bit before the FOMC meeting, which I believe, like I said, is the 14th or the 15th. And I think that that's probably around 60K, to be honest. It could technically be a little bit lower. Let's see if the daily time frame. Oh, look at that. We're right on a daily Fibonacci pivot at 65.8K. 65.3 right below that is a little important too. Looks like we wicked to that and then bounce back above it. But functionally speaking, 60K is going to be the more interesting one once we've actually lost 64K. And we haven't lost 64K in a long time. You know, the last time we touched it was over here in February, which is still, you know, that's when we had the major drop. So not that surprising that we were able to hit that. But functionally speaking, for other targets, it's 64K and 60K are really the only ones that are important. I guess you can cherry pick if you want. I think, like, I know a lot of people were using this as this was hilarious to me when I was seeing this in videos. They were saying that we're not going to go, that 60K is the bottom already because we're not going to go below these closing candles for 2021. And the reason that they're saying that is because of 2018, because this is where our monthly closing candles are in 2017, sorry, is 13,800. And then when we had our pre-halving year run up, where the price failed is right at that same level. So it wicked that level and then failed and closed closer to around 10,000 being the key psychological level. So this is what was allowing a lot of people to think that 100K was going to function in a similar way. Again, I remember thinking, oh, this is silly. Like, this person doesn't understand the chart, because we have a couple different factors that make it a little bit different this time. Specifically right here, this is the ETF boom, 73.8K. I talk about that all the time. This is the all-time high that was set and a new precedent. We had never seen that before in a halving year. Very, very important for that to happen. And again, we need to assume that if the price was just going to continue higher, that all these ETF buyers were never in pain. All of the top buyers of last cycle are never in pain. And that's not how a market cycle works, my friends. Certainly not for Bitcoin. Those people need to be in pain and have to go through the decision matrix of, do I sell this, do I hold it, or do I buy more? Until those people are forced to go through that decision matrix, this cycle is not over. I hate to break it to you. So more likely, again, how low does Bitcoin go in the month of June? I believe it's 60 to 64K. The fact that we've already gone down this violently, this quickly, tells me it's 60K, not 64K. I would believe possibly a little bit lower. I guess theoretically speaking, the lowest I could believe is around 54K during this time. The bottom of the Bollinger Band is currently at about 59.5. We do have instances where it breaks it. Interestingly enough, actually, it looks like it broke it in June last time. So it is quite possible that that is the case. That was in 2022. We didn't touch it in 2018. We did not touch it in 2014. So that's not like a hard and fast rule for me. I don't need us to touch the bottom of the Bollinger Band. I think it's more likely, as I said earlier in the video, that we're going to continue to expand to the downside, in which case it doesn't need to touch it. It just needs to kind of follow along it. But again, I wouldn't really anticipate the price going much lower than 60K in the month of June. And then again, Kevin Warsh is going to get on stage, do his little dance for the Fed, and then I would imagine the price reverses. And that's it. You know, I wish I had something more clear cut to tell you, or like some other way. Like, I was talking to my dentist yesterday, and my dentist was like, "Oh, you have a crystal ball," huh? Like, laughing, because if like it doesn't take me seriously. But if you follow me on this channel, you know I'm accurate way more often than I'm inaccurate. So I have every reason to believe that my analysis is sound and that we're going to go somewhere between 60 and 64K. And if we show sincere weakness at that point, we could go as low as 54. I'm not really betting for 54 personally. I will probably close my short position at around 60K. There's already an argument for me closing it now, but I don't know. I think we're going to retest 64, and if we retest 64, then that puts more pressure towards lower than 64. So I'm content with just kind of waiting until we see that. And then again, sorry, I got distracted. I started rambling, but at that point, I'm going to have to decide: do I close the short position for the perpetual and then expose myself to the long side? I would think probably for I would have to consider doing that with a perpetual trade because, again, I don't know where that top is going to be in July, and I would have to flip from the June futures contracts to the July futures contracts, which I don't really want to do. So, me personally, I will probably close that perpetual trade, flip it to a temporary bullish perpetual trade. Again, with the closing target, I didn't get this as well on the way up. I think I closed it at like 78, even though I knew we were going to 83. I did not close my long all the way at 83. Again, partially because I was listening to other people's channels, dude. I should not have been doing that. Should have been focused on my own newsletter and my own channel, and helping you guys when you leave comments down below. But functionally speaking, that's what I'm going to have to decide is, do I flip bullish on my perpetuals once we've hit that, roughly 60K target? I'm going to do that based on my rule set more than anything. So I'm going to have to combine my historical analysis just with the rule set. If I see a clear break on the bottom side around that range, cool. That's going to give me an indication where I can actually enter there. But based on my analysis, that's what I'm expecting, is we continue to break lower until right around the Fed meeting in the middle of June. I would imagine at that point that we have reached our consolidation point and start to head higher into the end of June and the month of July. If I was just going to take a wild stab in the dark of where I think June is actually going to close, I would imagine it's somewhere in here, probably. Like I would think closer to 68.2, 68.4. Again, we could wick all the way back down here, but I'm inclined to think that by the end of the month, we'll probably be up back in this region again, even though we've already broken below that now. Just again, the market makers are going to want people to be excited about the Clarity Act reaching its fruition. They're going to want people to be excited about the strategic Bitcoin reserve. But again, they're having a UFC fight on the White House lawn. So if you think that we are in a regime that is best for the people, you're delusional, my friends, and you deserve to have your money taken away from you. That's it for this video. I'll give another update on Friday. You will receive this in your email in a moment. I'll go send this over to the newsletter. Thank you so much for all the subscribers over there. It's been pretty crazy recently, growing like wildfire. Let me know if you have any comments down below. If you want to work one-on-one with me, you can send me a message on Threads. I think you can even send a message on YouTube now. Don't do that though, because I'll never see it. You can send me an email directly from any newsletter. And yeah, that's pretty much it. Happy trading, everybody. Best of luck to you. I'll talk to you on Friday. Bye-bye.